So Fabio, kind of something I've been really optimistic and frankly kind of bullish about lately, and I know that you've been skeptical of this stock in the past, is actually AMD, funny enough. So I kind of wanted to pick your brain a little bit and like figure out why there's sort of a doubt or hesitation behind this stock.
Okay, yeah, that's a good question. I mean, for me, I'm not skeptical of the company. I like the company. I'm just skeptical of the stock price. And sometimes people have to separate the two. Well, it depends on what we're talking about. But I think in this particular instance, I don't know entirely. And I think we'll do more research together right here. I don't know entirely if the stock price currently justifies the current and future potential of the business, but we'll find out. But that's where I'm kind of skeptical. It's not on
Yeah,
the
so
business.
kind of something that I kind of want to touch on because you've been a prior shareholder of this stock, like you've owned this
Yeah.
stock prior. What were some of the reasons as to why you decided to sell this stock? Because when I was doing kind of a preliminary analysis into it, I was seeing like record cash flows, just incredible assets on their sheet, like everything. And these were reasons to me,
Yeah.
at least in a preliminary analysis, that signified significant green flags and reasons for me to be bullish in instance. So I'm just kind of picking your brain a little bit just to see like where you are and like if we can meet halfway with this, you know?
Yeah. I mean, when I did own the stock, it was when the market as a whole and in the investor community didn't really appreciate what was going on, what Lisa Su was doing with the business. And basically you were getting a business that was like a turnaround play. So AMD during those times in like 2016, they were kind of just like spat on, not really taken seriously. And you had the market leaders, NVIDIA and Intel, just completely dominating. And I even remember you would go on YouTube actually, and you would see technology reviews, and Intel would just be wiping the floor with AMD, and same with NVIDIA. And there was these, power problems with AMD, overheating problems. And so I saw that Lisa Su had a plan in place. What I was buying was a good risk reward. And I figured that AMD could probably turn out something where they could take some market share out of Intel. What I liked about AMD actually going into it was that they kind of dominate the console market. I don't know if you knew that. You might have already known
Yeah.
that. So if you buy an Xbox, if you buy a PlayStation, you got AMD in there. And so they elect what intrigued me actually about AMD is they elected a completely different strategy from Intel. And actually, that's where I'm going to bring you in and actually ask your opinion, because you've been researching the stock more recently. So what do you think about AMD going fabless? Because I know there's some benefits, so there's some drawbacks, but their competitor Intel, they're not fabless. They can manufacture their own chips. AMD cannot. They simply design the chips, and they have others like Taiwan Semiconductor manufacture them. What do you think?
I think that there's probably an operational risk along your supply chain in that instance as well. But I know like kind of during my own sort of taking a look into this, like my own research, I
Yeah.
noticed that AMD is investing in actual, like they're investing in parts of their supply chain, which to me, and I posted a full article on my preliminary findings. I posted a full article on our website, capitalmindset.org. I think that that's actually a pretty good reason, because I mean, Intel kind of has the ability to go fabless, but then AMD itself too can also, if they're investing within their supply chain, that might be a way that they're trying to mitigate their costs and
True.
increase their economies of scale in essence, basically. But something that I also kind of found interesting too was in 2018, I first started investing too. And I bought AMD when it was $11 a share, and I sold when they were $70 a share. And I kind of had this like bias where like I was like, oh, I don't want to buy, like I've already made my profit. It's time for me to go. And I kind of like came into that until actually a mutual friend of ours brought up AMD to me too, because I too currently am an Intel shareholder right now. And he brought up AMD to me, and it kind of piqued my interest. And I decided to look back into it again. And Fabio, the cash flows right now are incredible in this business. They're absolutely incredible. And they've been pretty much eliminating debt off of their sheet. And these were two like massive green flags that I basically found like while I was conducting my preliminary analysis into this company. And something else that I also kind of noticed too And I remember I was telling you about this a couple of days ago, and you told me this is indicative of the industry itself as well, is they're investing a lot and really heavily into research and development. And what that gives them is a tax credit. And because of that, we also see on their sheet that they have a significant deferred tax asset, which would help explain their earnings and vice versa. But Fabio, I'm also kind of wondering now too, what you think potentially as being an Intel shareholder yourself, like whether or not you think that those arguments that Intel might lose revenue over time that I've heard a lot just personally between friends and mutual friends of ours, you think those arguments kind of hold scrutiny, especially with some of the new information that's been coming out about Intel as well?
I mean, I think depending on what you're talking about specifically. So if you're talking about
Yeah.
on as for market share, maybe, yes, but you also have to consider that the market itself, like the pie, is growing, and Intel is expanding into different businesses, such as being the fabricator for a lot of these other semiconductors like Qualcomm. I think Qualcomm just signed a big contract with Intel that Intel will produce a lot of Qualcomm chips. Qualcomm was actually another one of my semiconductor holdings, funny enough, and no longer actually, but it was. I bought in before when they were having that whole drama with Apple, and but back to Intel. I think Intel's strategy might pay off. Will they lose market share in their products? Maybe, because AMD is the up and coming. Now, I will say this: no one's really talking about this. So AMD is, let's say for argument's sake, let's all agree that AMD is currently dominating. Okay. So let's just operate under that assumption or that statement of fact. Okay. So they're dominating during a time when there's a shortage. So ideally you want to dominate and not have the shortage going on. Okay. So let's say the demand for the total semiconductor industry is 100, right? And you're able to produce 30 and your competitor is able to produce 40, for argument's sake. You have the superior product to theirs, but both of you are going to sell out. You get where I'm going with this?
Yes.
So AMD may have the dominant product right now, but they're not truly able to capitalize on it. So if there wasn't this unfortunate conundrum with the supply chain, they would potentially be making a ton more money than they currently are right now. Intel is lucky that this is happening because in a time where they're getting dominated by AMD, there is a supply chain shortage. So all of their inventory is still selling out. So you see what's going on here is Intel is not really getting hurt and they're getting all that cash coming in. Now, this could be a good or a bad thing. It just depends on what you think will happen, whether or not Intel will improve, but all this cash is coming in. And if you thought AMD's R&D numbers were pretty impressive, you should check Intel's. I think their R&D expenses is, I think, nearly the revenue of AMD. I know for sure it is greater than the income of AMD, which is saying a lot.
Isn't that due to a lot in part to that Intel is currently working as well with the government? Like they have a vested interest in the government as well. Isn't there something going on with that? Because I remember you were talking about that a little bit earlier as well.
Yes, the CEO, he is lobbying the government. He's lobbying the government to not give funding to Taiwan Semiconductor because Taiwan Semiconductor is a Taiwanese company and not an American company. And that's part of the infrastructure bill to get production here. So you actually have to consider that if the CEO of Intel is successful in lobbying the Biden administration, they can basically secure very cheap or free capital to build out their fab business here in the United States. So that is something to consider because that will bring benefits to the United States in terms of security, that will actually produce more chips here in the United States. So the government has a vested interest in that, and that could also benefit Intel shareholders because they will be the owners of the fabrication facilities, and the government will just upfront the capital, some form.
Cool. So kind of piggybacking off of AMD again, and something interesting that I noticed too, you mentioned Apple a little bit earlier. And when I was kind of doing some digging, I found out that the chief technology officer of AMD, his name is Mark Papermaster. It turns out that in 2008, he used to work for IBM and he was sued by IBM specifically because they sued him over a non-compete clause. and he was forced to testify in court saying that he would not divulge trade secrets that IBM has to its competitor Apple. Then that next year, when the iPhone 4 releases, they had all these like issues and stuff, and it turns out that a lot of people, and this is an unconfirmed source, this is like an anonymous tip. It turns out that they actually blamed that for him, and that was the reason why he was let go. Now, this is an anonymous tip. This isn't actual, like, there's no court case testifying this per se. But now I find this interesting because he's been with the company since 2011. And I was kind of mentioning this to you. Although the risk of this is small, Fabio, there's still a sizable management risk here that I kind of priced into our discount rate itself. I gave that a 5% variance. So typically when we like to invest, we like to take just the market average 10%, and then we add on to that, which is a given margin of safety, depending on these levels of risks that we kind of see. And then something else that I also see too, if you look on their balance sheet, Fabio, there is a tremendous amount of additional paid in capital. And kind of, if you go to the statement of stockholders' equity, you see that kind of relates to like employee compensation plans, stock-based compensation, all these other sorts of things. And I kind of want to get like your thoughts on that too. Like, is that something, I mean, to me personally, it looks like something that could potentially dilute shareholders going into the future. But is that like a primary concern to you, given like the nature of this industry itself? Or is that more so something that you're kind of like, yeah, that kind of happens, like it's whatever,
Yeah, in the industry where technology is king, you do have to be concerned with your competitors poaching talent. And if a lot of the success of your product is dependent on those key employees, that can be a problem, obviously. So whether or not this specific employee is integral to AMD's operations and their technological supremacy at the moment, I don't know the answer to that. But
well,
if
that's also something that we would have to research more into, which is the reason why I'm saying today that I think AMD, there's an opportunity here, Fabio, and I think that we should do more research into this company before we make any sorts of decisions. But continue. Sorry, I didn't mean to interrupt you there.
No, that's actually perfect. I actually agree with what you said, though, with adding a greater discount to these kinds of companies, because I would actually just say, as the nature of the industry of it being so reliant on having the technological supremacy, you want to get a discount on that, because if a competitor comes out with something better next year or 2 years from now, you don't really know that. But if they could, then all of a sudden your product can be obsolete, and maybe there's not a supply chain shortage. So for example, hypothetically, let's say Intel comes up with this new chip, and this new chip is a lot better than the AMD one. And I doubt this, but let's say it's even cheaper. So then all of a sudden there's tons of this on the market because there's no supply chain shortage. Why would you buy an AMD chip? And AMD can't catch up because for whatever reason. So you want to have that discount because you got to consider moat. And that's why I completely agree with what you said. But I would add on that just by the nature of this industry, I would actually have a higher discount rate than other industries, like, for example, consumer staples or real estate, stuff like that. Yes.
Yeah. And like, especially too, like if we kind of pull open AMD in the model now, when I was doing the preliminary analysis, Fabio, what I kind of noticed actually was first and foremost that with the market rate of return of 10% and like 35, even all the way down to like 20% growth rate in cash flows year over year, AMD was a buy at 10%. But like me and you always say, that's not a margin of safety. We don't like to invest without a margin of safety. But then when I also plugged in a 17% rate of return, something else that I kind of also noticed too, and I actually found this incredibly interesting itself, was just the fact that if we take our required rate of return, Fabio, and we make that 17%, all right?
Yeah, let's go ahead and do that.
Now, they actually announced recently a share buyback program to the amount of like, I think it was $4 billion, which when I calculated it minus the amount that they had already bought back, it came out to about 3.13%. And this is on our article that we're going to link in the pinned comment below. And yeah, so just 3% is fine. And then growth rates, Fabio, I would say that for AMD, because their cash flows over the past 2 years in 1920 and the trailing 12 months as of right now, they've been skyrocketing. So I would say for growth rates, I would say on the low, we could probably let's just say for the sake of this, 15%, and then on the high, 35%, and then we just fill it in from there.
Okay, so on the high, let's do 35. And let's go down by, I guess, 30%. Would you agree with
Yeah,
that?
25 and 20. Yeah. So this is what I found really, really interesting. And actually what I called you about on Saturday too, is that at a 35% growth rate in cash flows, the buy price is $132, which by the looks of it, it looks incredibly undervalued. But I kind of want to pick your brain now, Fabio, that what could be potential limitations that I might be overlooking right now that we would have to do further due diligence into to correctly price this discount rate for?
Yeah. So actually, there's a couple here. So that buybacks can be a great way to return capital to shareholders, or they can be a great source for shareholder value destruction. Now that it's difficult to see when it is shareholder value destruction, because first of all, in order to identify that, you have to be good at picking investments. So if you believe that the stock is a good buy, then ideally you actually would want the company to buy back shares. But what if you're wrong, right? And then so they're buying back shares at elevated prices, at prices they shouldn't be buying back shares. And that effectively is destroying shareholder value, because when stocks are expensive, you actually want the business to actually issue shares, because that is a cheaper form of raising capital. And when the CFO is looking at how are they going to acquire capital for new projects, they're supposed to, if they're doing their job correctly, get the cheapest form of capital to accomplish the job, because that increases the net present value of the project. So that's the whole caveat with buybacks. You want to make sure that the buybacks are being done at appropriate prices. Then you want to make sure that buybacks aren't being done with debt. Now with AMD, I don't think that's the case. I think that they're funding the buybacks with cash flows. I know that they're at a point where they're almost printing money relative to their past. Now these growth rates, what is their current cash flows? Do you know that off the top of your head?
I couldn't tell you right off the top of my head, but I would say it's probably in the $2 billion range. I would guess cash flows from operating activities. If I'm just taking a wild guess, Fabio, I guess it's 2 billion, but I really don't know.
So we can take a look at because we're using this part of the model. We can take a look at what you're basically expecting, and we can kind of get an idea if that's realistic. So at a 35% growth rate for 10 years, assuming a 10-year model, you were getting to about 50 billion. So $50 billion in cash flows on the 10th year. Now, what do you think? Is that something that's realistic for AMD? I think Intel.
I can't even exactly say if that's like, I can't say with certainty if that's something that is either realistic or not realistic, which is exactly the reason why I believe, Fabio, me and you should do further due diligence into this, if that in essence makes sense. Because I would have to see, first of all, the industry trends, how much cash flows historically tend to grow in this particular industry year over year, how much they've grown the past 20 years. AMD's been around for about 52 years. So I would need to see over that period of time how much cash flows have historically grown. We know that before Lisa Su, AMD was in a very bad place. So that's kind of like the hard part. And honestly, the reason why you always say investing is more of an art and a science about trying to, in essence, predict where the cash flows could be in the future. And also if that's like a reasonable prediction to make. So what would you say, Fabio? What do you think a reasonable amount of cash flows would be for AMD in this future? Or are you kind of in the same boat that I am, where it's kind of yet to be seen and we need to do more research beforehand?
Believe it or not, I think it's possible in 10 years, because I do think that chips, so CPUs, GPUs, they're going to be everywhere. And with that being said, AMD, NVIDIA, Intel, I think all of them are going to play a huge role in the way civilization functions. So I think you can think of the idea of like smart cities. Well, what does smart cities entail? Well, smart cities entails that, the street lights are all coordinated. They communicate with your vehicle. So like for self-driving, right? I've spoken to a lot of subject matter experts about self-driving, and so from what I'm learning, because I myself am not one, so I always consult with others. And what a lot of them are saying is the cities themselves, the roads themselves will have to be the infrastructure will have to be set up in a way where the car can basically communicate or identify these objects and these key points. So that way it can make the safest route or the safest decision. So going forward with that, I think, what we'll have in the future, we have 5G now rolling out, then there'll be 6G. As these technologies progress, we are going to have more and more data passing through these networks, and more data passing these networks. These networks are going to have to get more complicated, more sophisticated. They're going to need a lot more chips. I believe that almost everything we buy in the future will have some chip, one form or another. That doesn't mean AMD is in every single one. So like, you have many players in this industry. We have Texas Instruments, Qualcomm, Xilinx. We didn't even get into Xilinx. You want to get into Xilinx?
Yeah, I was actually about to ask you about that, Fabio. In fact, how would the situation going on with the Chinese regulators having to approve the merger right now, how would that kind of be priced into our discount rate in essence? And I honestly think, Fabio, that we should kind of get into like minimum thresholds based on like what we think, as me and you here at Capital Mindset, like what we think the minimum threshold is for businesses that choose to do business in China, in essence, and why we like to use such a high discount rate. And then kind of, because you were telling me a lot about capital restrictions and et cetera, and then kind of go into that and how that potentially prices into these discount rates that me and you preferably like to use while we analyze potential investments.
Yeah. So another shameless plug here. We're writing an article right now, and it's going to be free on not Seeking Alpha, sorry, on capitalmindset.org.
It'll also be on that too. So
yeah, we'll try to put it on there too if we want to.
Yeah.
But I don't know if they'll let us post that.
Yeah.
But on our website, we're gonna have a free article for everyone to read, and it's getting into a lot more of the details of the risks that people don't really talk about in China. We did one video about it, but this is like a deeper dive as to the legal ramifications of what it exactly is going on there. So one of the things Austin just mentioned is the capital restrictions. No one's talking about this, but if you generate above a certain amount and you want to take it out of China, you need explicit permission from the government. And this is not currently reflected in a GAAP. So GAAP stands for, Austin, you want to say that?
Generally accepted accounting principles, and
it's
established by the FASB.
There you go, the FASB. So the FASB hasn't updated the GAAP standards to reflect the differences in cash treatments for cash in China versus cash everywhere else in the world. Chinese cash is the only cash that's really like this as far as the major economies. So if you have cash in China, you can't just take it out because it's not really, well, that's getting more in the philosophical terms of cash and what it is, but it's technically not your cash if you can't do what you want with this. Yeah. So AMD doesn't have that problem because they sell into China. So it's not like other companies like Nike or Starbucks or Disney. AMD actually doesn't have this problem, which is actually a good thing. So AMD is selling chips to Chinese manufacturers or Chinese producers who produce these computer chips or whatever. And they're still getting their money. So that money, I would more likely say that all that we can count as cash, just cash. And same with the cash flows. Now, what I just mentioned, take that with a grain of salt onto other businesses you may be looking into and kind of figure out what that could mean for your investment and price that into the discount model. Yeah. So for Xilinx, I like their acquisition of Xilinx. What about you?
I personally have not done a huge amount of research into this acquisition itself. I was mainly focusing more on the business as a whole. And then like throughout my next set of due diligence, I was going to dive more into that afterwards. For me right now, I can't exactly comment on that, Fabio, but what I can comment on is I think that you were kind of telling me that with the whole like Chinese regulator thing, like what would be like the minimum threshold discount that you would apply to this? Like, would you apply like a 5%? And then if so, can we open up the model again and kind of go back through that again?
Yeah, so let's actually open up the model right now. Again, we can kind of play around with it. I would actually not count this in. I wouldn't say a buyback.
Yeah.
So you see that already troubles me, because that assumption, that scenario doesn't work if you don't consider a buyback.
Yeah. And then also with the 17% discount rate, Fabio, let's kind of price that initial 5% in with the Xilinx merger. Now, bear in mind, have not done my due diligence on the Xilinx merger itself, so I plan on doing that, but I haven't yet for the time being. So I'm going to let you kind of take over that, Fabio.
So Xilinx is another semiconductor company. To kind of summarize, because we can do a whole video on Xilinx on its own. But Xilinx, AMD, when you see AMD stock price, AMD on the announcement of their merger with Xilinx actually rose, because a lot of investors like the idea. They think it's going to be accretive to the operations of AMD. It fits well with AMD. That's why I liked AMD way back when, because Lisa Su, I thought she was a visionary.
I still think she is, man. She's doing a great job.
No, she is. Yeah. They they made there was this rumor going around that she was the niece of the CEO of NVIDIA, which is not true. Yeah, it's not true, but it was funny, because it was more of like a testament to how much of a leader she is.
Yeah.
Say that she's related to this person. But anyway, going back to the discount rate, what's interesting to note is, I'll go ahead and pull this up. So if we go look at the AMD stock price.
Fabio, kind of like after we kind of make our way back over to the model, let's kind of go into the Altman Z-score as well. Because I actually remember you telling me that AMD kind of exists as like an anomaly in regards to the Altman Z-score.
It did.
Where it was like, where it's apparently it's like 97% with accuracy that the company in those 3 years. Now, bear in mind, this usually works with industrial companies, but in those 3 years, the company will go bankrupt itself. Yet AMD seemed to surpass that. And that's really actually incredible. And that's a testament to Lisa Su's leadership, Fabio. Wouldn't you agree with that?
So yeah, right now it's actually not at risk according to Altman Z-score methods. But back in the day, it was. And it was one of the companies that kind of was in that 3% category. So that's to go to show you that it's not a certainty. Altman Z-score is definitely not a certainty. But back in the day, when I say back in the day, I think it was 2006 to 2009 range. It was when they were divesting their fab facilities, which, by the way, Intel might be buying. And that's interesting. But Intel might actually be buying AMD's old fab business that they spun off. Which AMD's strategy to do that, they became a leaner, meaner machine, and they were more able to focus on investing in their technology, and that proved to be that proved to be the right move.
Yeah, and I have, in fact, you can see it right there. That's a AMD build, Fabio.
Yeah. Yeah. Oh, so you're not biased.
Yeah, I'm not.
Not at all.
Not one bit.
what I'm kind of showing with this tab here that's open, this AMD stock price, it wasn't too long ago that we got these prices where the model's actually saying it's a buy. So in this range, I don't have to assume much, and I can not take in any buybacks. I can say, oh, there's no buybacks whatsoever. Let's assume half the average share dilution. Let's say they keep doing that. And let's actually account for it. Okay, so you see, I'd have to get a pretty nice crash or correction. But what this is saying is, at these prices,
with a 23% discount rate.
Oh, I would be buying AMD all day, every day, all day, every day. I'll lower that. I think that's too much for something like AMD. But at these prices, I'd be buying AMD all day, every day, hand over fist. Now, if the market's not giving me that opportunity right now, so for me personally, it's probably not going to make it in my portfolio. It's a darling of mine. It was one of my earlier success stories, but not today for me. However, if you can, or not you can, but if we can figure out and we can somehow divulge a number like this, on the growth rate somehow that AMD will do that, I'd be buying it. But
Yeah,
the level of confidence I'd have to have
and a
in that,
50% growth rate. Yeah.
yes, because look, at a
Especially.
50% growth rate, even if they dilute me by 3%, I'm gonna come out on top.
Yeah.
But that's a big
Yeah,
hurdle.
that's a very risky play, Fabio.
Oh yeah,
So yeah.
yes it is. So to summarize, are you gonna do more research?
Yes, I definitely think I am going to do more research into this. I still believe, Fabio, that there is an opportunity here. But like I said, a lot of these growth rates that we're kind of constructing right now, just for the sake of like an overview of our preliminary analysis, like these are kind of just like us throwing in numbers of what we think the stock could do, but we haven't exactly priced into these growth rates yet what we know based off of data and research what it could potentially do. So I think that that's indicative in of itself, Fabio, to do more research into this stock personally.
Okay, yeah, I think it warrants more research. I think it's a great company. I personally am an investor currently of Intel, but I would not be adverse to investing in AMD. I think AMD is a fantastic company.
Yeah, and then I'm also too. I think we should also do more research as well onto the Xilinx merger potentially, as well as some of the ramifications of that. I think that could be priced into our discount rate as well. And then, yeah. So Fabio, do you have any more closing thoughts about this as well?
I think if the Xilinx merger doesn't go through, we're going to get a nice discount on this company.
Yeah,
for sure.
Yeah.
Because what actually we forgot to mention, what are the stipulations if the deal doesn't go through? How much does AMD have to pay Xilinx?
$1 billion.
Yeah.
I'm pretty sure it's $1 billion, Fabio. In fact, I would actually just give that a quick look through Google right now.
Yep. And let me just quickly check their cash on hand. Yeah, look at that. That's gonna smack 33% off almost. Well, 25%.
Yeah, but for the sake of this. So AMD Xilinx merger, I think it's like closing
breakup fee.
Yeah, breakup fee. Yeah.
1.5.
1.5. So I was 0.5. It's 0.5 off, Fabio. I was almost right.
Yeah. No, that's a fat fee.
Yeah.
That's gonna
so
take.
That'll take. I mean, I would assume. I don't know. Like, does it say in those stipulations itself it's one-time lump payment, or can they like pay it off?
AMD. We'd have to see. Okay, the company required to pay a termination fee equal to $1 billion if the merger is terminated in certain. Okay, so certain circumstances. Obtain regulatory approvals. Okay, so failure to obtain regulatory approvals will be 1 billion. This is probably. Okay, so 1.5 would be if the board of directors.
Yeah.
If the board of directors denied it, 1.5. If it's because of China, they're gonna have to pay 1 billion.
Okay. Yeah. So our next article too on this, Fabio, kind of like our part 2 of our AMD series, will be specifically just focusing on this merger itself and what this could potentially mean and price into our discount rate. So this has been our latest episode of the Capital Mindset Show. If you guys have liked what you've seen today, feel free to visit our website at capitalmindset.org. We're your hosts, Austin and Fabio. We hope that you've enjoyed what you've seen here today, and be sure to like, comment, and subscribe. Take care, guys.